All right, welcome back, everyone. We are literally standing at the edge of the biggest financial shift in human history. Seriously, it's that big. In this explainer, we're breaking down the architectures of value, the future of money. So, if you want to understand exactly where wealth is heading, well, you're definitely in the right place.
Think about this for a second. Will the money currently sitting in your pocket be completely obsolete by the year 2050? Well, based on the data and the current trajectory of global finance, the answer is leaning heavily towards yes. The cash you carry, those physical coins you just toss in a jar at the end of the day, they might actually be relics of the past in just a couple of decades. The stakes here are absolutely massive, and understanding this timeline is basically crucial to navigating what comes next.
But to really understand where we're going, we first have to fundamentally redefine what we're actually talking about. Like, what even is money? I mean, to some, it's just a physical coin you can hold in your hand, right? But to the global financial system today, it's really just a flickering number on a screen. It's totally abstract. Our collective agreement is literally the only thing giving it any weight. And because of that, the underlying tech infrastructure that's actually hosting that agreement, it's absolutely critical.
Okay, so here's our roadmap for today. We'll start with the definition of money, then move from barter to banks, look at the death of cash, dive into crypto, CBDCs, and AI, and finally ask, ready for the shift?
So let's jump right into Section 1, the definition of money. Moving right along to Section 2, from barter to banks.
You know, for thousands of years, the specific ways we've chosen to exchange value have entirely defined our civilizations. Really, money began as a way to solve a distinctly human problem: trust. Think about it. When early humans wanted to trade goods, they had to trust each other. And, well, they both had to actually want what the other person had. So money was invented as this universally trusted intermediary. At its very core, money is basically a technology of trust.
And that technology of trust, it's been upgrading continuously over millennia. Like going back 3,000 years ago, we relied on direct barter systems. Then 2,500 years ago, humanity standardized around gold and precious metals. Fast forward to about 1,000 years ago, and we saw the revolutionary introduction of paper money, backed by authorities. Now jump to just 70 years ago, the mid-20th century, and we see the birth of the global financial system we recognize today, centralized in these massive hubs like New York and London. Notice how the leaps between these innovations are getting shorter and shorter? The velocity of financial innovation is just compounding.
Because the historical pattern here is crystal clear. Money always becomes more abstract and faster to move. We went from lugging around heavy grain to shiny metal to lightweight paper, and now, invisible electronic signals. So this shift to modern digital markets isn't some weird anomaly. Actually, it's the exact natural continuation of a rule that has been playing out for literally thousands of years.
Which brings us to Section 3, the death of cash. Just take a look at the steep decline of physical cash usage in the UK and Canada over the last decade. I mean, the numbers are dropping like a stone. In just 10 years, physical cash has rapidly disappeared from daily circulation. People are just tapping their cards and their phones. It's honestly happening incredibly quickly. And what this really means in practice is a shift to invisible money. We've got digital banking dominance and, the incredible convenience of instant global transfers. But here's the crucial part. Transactions are now tracked as data network nodes. So it's not just about the convenience of a quick tap anymore. It is a fundamental change in how value is actually recorded. Every single transaction you make is now a permanent piece of data in this massive global network. Which naturally forces us to ask a pretty big question. Who really controls your wealth? Think about it. When money is physical, you literally hold it. But when money is data, well, it sits on servers owned by banks, regulated by governments, and transmitted by massive tech companies. This raises some completely unprecedented questions about privacy and security, because if every transaction is just a tracked piece of data, control definitely begins to shift away from you, the individual.
Let's dive into Section 4, crypto, CBDCs, and AI.
So because of those exact concerns about control and privacy, our current data-driven money system is actually beginning to fracture into two completely distinct competing visions. On one side, you have decentralized assets like Bitcoin, which are designed to operate via cryptographic consensus, completely outside of traditional government control.
But then, on the exact opposite side, we have CBDCs. That stands for central bank digital currencies. The world's largest central banks are developing these to maintain stability and oversight through programmable monetary policy. It's this profound philosophical and technological clash between decentralized networks and centralized command. And honestly, the winner of this clash is going to shape the next century of finance.
Okay, now introduce a third player to the board: artificial intelligence. AI is already out there analyzing just unimaginable amounts of global economic data in real time, and this allows algorithms to execute trades at literal superhuman speeds. We are way beyond the days of human traders yelling at each other on a chaotic stock exchange floor.
The takeaway from the source material here is both stark and kind of fascinating. The future of money isn't just digital. I mean, we're already there, right? The future of money is automated. Global markets are increasingly being managed at speeds no human mind could ever possibly comprehend. Human beings are basically being written out of the moment-to-moment execution of financial exchange. It's wild to think about.
And that brings us to our final section, number 5. Ready for the shift?
We've traced this incredible journey, right? From a simple, trusted handshake over a bag of grain, all the way to AI algorithms executing microsecond trades of completely invisible digital assets. The very definition of money is changing once again, right in front of our eyes. It's becoming pure data, managed by algorithms, and it's caught in this massive battle between centralization and decentralization. The money currently sitting in your pocket, it's fading into history. So I want to leave you with this one question. As the very architecture of value shifts beneath our feet, will you be ready? Keep your minds open, keep learning, and hey, thank you so much for joining me for this explainer. I'll see you next time.